Welcome back. Still tuned into Market Sense. We've got Rahul Shah, Associate Vice President, Group Leader, Equity Advisor Group, and Motilal Oswal, who now joins in to assess the market momentum. And Rahul, what would be your assessment, because it has been fairly volatile for the markets. Finally, we've managed to recoup that 6,300 mark. But do you see us sustaining at these levels?
I think markets will sustain at these levels, but if you look at last couple of weeks, the data where all mid caps which have rallied quite a bit, and index has been in a range bound. So I feel the index still will be in a range bound, say from here to 6,200 and 6,400 levels is 200 points up and down. And for precisely any major movement beyond that, I think it has to be moved beyond 6,400 closing wise. Then only you will see some new highs post that. But overall, I think it should be from 62 and 64, this 200 points here, there, then index should be there.
Give us your view on the power sector, because we were just flagging this off earlier with respect to, Virappa Moily now taking charge. There have been quite a few changes, and the road ahead seems very promising. Do you see, with things seeing a fundamental shift, that there is more promise in this sector?
See, if you look at a lot of sectors, like say, I think power has been underperforming in the index as well as the markets also since last a year or so, and most of the stocks, I said, has been done very badly. So we feel like that from this level, say a couple of good stocks. Say maybe if you look at NTPC at current levels, NTPC could, if somebody wants to bet on some power sector, then NTPC could be a good betting on, getting into at this price. Maybe one can look at Tata Power also at from current levels, but those are all again it's an investment portfolio. If somebody is looking out for, then only you get into those stocks. If you are looking for a trading perspective, does not mean you should go ahead and buy at these levels. But if somebody is an investor, then yes, you got a patience, because this sector has been under lagat since quite some time, and you still need a patience to going for a bigger a bigger rally from here. So I think it should do well, but for an investor category of clients should get into the stocks.
What about the IT space? It's had a very good series, the last one. Can it continue and move up further from these levels, the large cap?
Yes. Definitely. IT still will do well from here. I think better names like TCS and Infosys still can give you 10% returns from the existing levels also. I think IT, where the visibility of earnings are there, I think those sectors, if you look at in the markets, have been catching the frenzy, be it pharma or it be FMCGs. I think where you have the visibility in earnings and IT, so I think Infi and TCS both looks for at least a 10% upside from here onwards. Also in the mid cap space, you can look at eClerx, which also looks fairly poised at from the current levels. So I think IT remains still still looks like it should be in a momentum from current levels also.
It will underperform if indeed your view is that Nifty will stay 6,200 to 6,400, and if IT is to give a 10% uptick, what will not do well?
I think what will not do well from here is, I think still banks will be underperformer from here. I think FMCG has already taken a backseat. If you look at it, last entire rally FMCG has not performed. So I think banking little bit will be on the subdued side, as well as your FMCG will be on a subdued side. So these two sectors might remain under pressure from here.
What's the call on auto stocks?
Auto should do well. I think obviously we'll have to wait for our auto monthly numbers, which will be out in first week of Jan, I think, and then you will see some more momentum gathering into auto stocks also. So I think in two-wheeler space, I think Hero Honda looks to be a better bet to get into at this space. So I think auto looks okay from here. Hero Honda in two-wheeler space, and M&M if somebody is looking about, then M&M also looks good from current levels.
Great, Rahul. Good having you. Thanks so much for joining in today and giving us your views and your recommendations, and have a great new year from all of us at ET Nav.